Welcome to the Kindle Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Before getting into tonight's video, I want to thank everyone that came to the live stream. I went through a deep dive in the markets, long-term expectations, a lot of things talking about inflation, interest rates. There's a lot of content there. We've marked the timeline so you can see what I was talking about in that 2.5-hour presentation. So make sure you go back and look at sections that you have interest in. But as we look back on yesterday, it was another lackluster trading session. S&P up 0.1, NASDAQ minus 0.2, and Russell up 0.1. Just no movement at all. The big stories yesterday were the U.S. dollar back over the 92 handle up to 92.25. Also a big discussion on the dollar in Wednesday's live stream. There were a couple big surprises yesterday. ADP came in at 692, was expected around 570, so that was much better than expected. We saw pending home sales come in plus 8%, which was a blowout number. Nobody was looking for that. I was looking for the number to miss, like all the real estate numbers have been going. So that was a big surprise to everybody, but it didn't seem to surprise a lot of folks because the real estate sector was down minus 0.8 yesterday. The strong sectors we saw yesterday was energy up 1.3, industrials up 0.8, and financials up 0.5. So we're really looking at this very mixed market. Markets are just locked in this sideways range from an equity viewpoint, and we saw the 10-year come back into around 145. No big deal there. I covered that in last night's video. I went through a lot of expectations for the 10-year and even discussing some of the inflation expectations as well. So I'm going to keep referring you back to the live stream on Wednesday for more deeper detail. As we come into Thursday, we've got claims coming out expected to show 395,000 new applications. I still think that number is going to miss. The big rumor or the big talk on the street is that folks are not wanting to go back to the office, and a lot of people are quitting their jobs. So it will be interesting to see what happens with these numbers over the next, let's say, 4 to 6 weeks. We have continuing claims coming out as well. They came in at 3.4 million last week. My magic number is 3.2. If it comes below that, I'll discuss that in tomorrow night's video. There's really nothing material going on out there in any of these markets. Everything is waiting for the employment numbers to come out on Friday, and it's going to be an interesting day on Friday. Not only is it the first report of the new quarter, but it's also a long weekend. We'll see what kind of squaring up of positions we get as we start into this third quarter. So let's go ahead and take a look at the charts, see how they're set up for Thursday. As I review the WaveTech database, we had 673 new buys, 365 sells, a 6-to-3 ratio on buy versus sell. The percent bullish moved up from about 35.5 to 36.42, so nothing material. As you folks know, watch the channel all the time, we need to get above 42% of the database to actually get a more sustainable rally. And as I mentioned in the opening comments, the markets are just absolutely flat. There's no momentum building. There's nothing happening in these markets that are suggesting that we're going to see a big move out of this range. It looks like more of the same, the creepy crawler moving up. I'll cover that here in just a minute. As I review the market grid for today, we've already traded R2 42.99, high 98.25, so we basically have satisfied that. The upper bounds of this range is R3 43.04 and 43.09. I also mentioned in yesterday's live stream that 43.08 is a key pivot number in the markets. We get above that level, we could see some acceleration start to show up. We're looking at as we look at the PPMs, we are seeing them start to tick up a little bit. We're not quite in trend level yet. We just continue to climb in this gradual slope. As we look at the SPX, the market grid just continues to stay very narrow, and I've been talking about this for at least 5 or 6 sessions now that this does present itself as somewhat of a risky situation. As we look at the market grid for today, the numbers that show up are R2 is 4305, R3 4309 can matches with that 4308 pivot number. RXT for tomorrow 4312. I don't think we'll see a lot of movement ahead of the unemployment numbers, but the range that I expect for today will likely be S1, R2 with the possibility of an R3. Next market I'll cover is the NASDAQ. NASDAQ is up 19 handles, up 0.13 on the session. We're seeing the PPM1 start to fade a little bit. We're taking out the first derivative here. PPM2 is stalled, PPM3 is stalled. So we're seeing a little bit of rolling over in this pattern. A few days ago, we did get an RXT sell signal, so we have maintained somewhat of a flat pattern for the last few days. I do think that we could trade down as low as the 10-period moving average, 14,357. If we look at the market grid for today, our S1, 14,518, S2, 14,485. So look for a potential of a R1, S2. We've already printed up to R1. So because of these tight ranges, I'm expanding my expectations on all of these markets to a possibility of an S2, R2 just because they're so narrow and the movement is so small. But we are starting to see the momentum stall a little bit on the NASDAQ. The final market that I'll cover tonight is gold. This is an interesting occurrence. As we look at the PPM1 on gold, we've just spiked up all of a sudden, cutting through the second derivative. We see the moving average, the 10-period moving average is flattened out, 1775. I've been talking about the support number at 1776. We're trading just below this number at 1771. As we look at the range so far overnight, 17,065, 1772. So S1 1766 has been satisfied, but I would expect to see an S1 R2 for today. This is a very interesting development as we look at this market, and this suggests that we're going to run back toward that 1800, maybe 1810. So we've managed to hold the key support in this pattern so far. This will complete the video for tonight. Make sure you go back and watch some of the key elements that I covered in yesterday's live stream, and we'll talk to you tomorrow night. Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.